The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Today is December 22nd, Thursday. This is Rose. Welcome, welcome. All right, so let's take a look at, can you guys hear me? Is everything good on your end? I know you can see my charts, just wanted to make sure. All right, good morning. Okay, let's take a look at what's happening with the daily. Yesterday was a good bull trend day, ended up in a trading range, which was discussed during the live session. And before the session, we already knew that market would bounce and we would expect some kind of bullishness. And because you could see that this week has been selling 5 consecutive, 4 consecutive bear bars. But if you count this as a bear bar, because it did sell quite a lot and closed on its low, but it is a bullish close. But you can see the bear pressure. We ended up selling into this trading range, but think of this as the trading range, and bears breaking below this trading range, okay, and then wanting also to test these levels. After this kind of move, they're going to want to have a second leg down, at least to test, okay, this area, price point, which we did, maybe even break below this right here, tight trading range. So this is where they want to go. And if they can, at least test these equal lows right here, one or the other. So bears want a second leg down, but yesterday's move, bulls also want a second leg up. But the problem here is that you can see that this leg ended up in a sideways. So bulls are not, breaking out. They got what they needed at that resistance line. They couldn't get above it, so we got a rejection. So we have to maybe give space for bears to print that second leg down. But what the bulls want is that the second leg, most likely to be a second leg trap, and they want to continue to go higher, maybe test right there, test these breakout test areas, okay, breakout points. So we'll see. So, but I think since there's only 6 trading days left until the end of the year, including today, okay, so there's not much time left. We could end up staying in a trading range rest of the week, this weekend and the next week into the close, unless we get some kind of a center rally. Then we'll know. If we do get that center rally, okay, so this area is an important area, and we could still be stopped out right there. And if we don't, okay, which is unlikely for bulls to actually get a reversal, okay, so it's already started bearish in the Globex session. I think the bears are going for that second leg. At least they will try, okay? So I'm going to go through Globex session. You can see that we were down, and we're back into this trading range, right? Now, can we reverse from here? Well, we're right at the Globex low, and if we do break down, okay, we could end up coming down to this level, or maybe even extend a little bit further, but we could still, okay, trap the bears and turn around, maybe go back a little bit, but we do have some strong bear gap bars that I think it's going to stop the bulls in their track. At least it's going to slow them down, these areas. So let me get rid of this. It's just too busy. There we go. So if we do get a reversal somehow, I'm going to expect bulls to actually not only reverse, but get to this moving average. There's sellers waiting due to these bear gaps, okay? But if the bulls actually reach certain highs, that high is going to be around here, maybe here, but bears can still reverse that right back down and swing back down at the end of the day. Right now, we're actually breaking the Globex session, Globex range, so we could end up stopping around here, maybe a little bit down below, okay? Also, yesterday was nice, but problem here is that strong sell zones up above bulls did close the gap right there, okay, which was good for them. But a day like this, it's going to go sideways. Now, normally, you see this right here running stops, right? That's right there is a bear trap, okay? Normally, a day like this should actually squeeze out the bears and continue, do a bull flag with double bottom. It's a bull flat. It's a form of a bull flag. But look what just happened there. Now, we actually literally distributed instead of breaking out. Now we're coming down. We close this gap here, and we're inside this, whether you call it a triangle. It looks like a triangle, but it's really a wedge, okay? So we squeezed out. So we're about to come down to the almost the center of it all, but I don't really look at those. What I look at here is that where was my trading range, okay? Just about. And where's the 50% of that trading range? That is what I'm interested. So I like to see actually bears now close this gap, maybe overlap with a December 20 close, okay? So that's what they're trying to do. They're completely trying to overlap with this closing bar and then finish this and close this bull gap. Now, what happens if they cannot close that bull gap? Well, if they cannot close the bull gap, then we have still a bull gap, right? So the bulls can still take over and reverse it right back up and close this, or try to close this gap, and that would bring us back up to this area, possibly, maybe even all the way to the highs if they do reverse it. But big bar at the open, okay? Big bear bar, trying to get a continuation. So we're trying to get to here. Maybe breach a little bit, but that's where they're trying to get to. So a second bear bar would start a trend from the open. So the bears really need to close that bar as bearish as possible. Now, can it get continuation? One bar. Would the one bar be enough to make a decision? You have to look left, okay? Always look left. If it was in some kind of a trading range, I'd say do not sell that. Since we have such void and open space, generally, I expect some kind of, even if it's a small continuation, I would expect a continuation for bear bar to pretty much print on the chart. So therefore, bar 2 here is trying to sell, but I want to be a lot more accurate, okay, with my reading. So what I'm going to do now, I'm going to find the area that I'm going to call trading range. And I want to see if the bears actually can get there. Now, this whole area is a trading range, but I'm looking for a little bit of tight area because these are all false breakout, and trapped the bears and went back right in. So this area is a lot more interested in. I'm more interested in, and that's the half, the 50% of this trading range. You can see the bears are still trying to continue, but let's see if they can. Now, what if we don't get continuation with bar 2? It's a big bar. It's very risky. So if you do sell it, your stop goes here, okay? And even if your stop's up here and we turn around and go back, the 50% of that big bar, I'll be more interested in for sellers. Now, as early as sellers can also, if you actually measure this, you get the one third. So as early sellers could be waiting there with a pullback sell, or the pullback could be to the 50% and sell from there. So if you do sell this bar, say you did sell it one tick underneath of bar 1, your stop still goes up here, so it's a big risk, okay? And look where we're selling into. We're selling into this area of interest, the balance zone. This is imbalance, okay? That's what the bears, the market looks at it as. This is imbalance, and they're trying to correct this bad price action. Where are they going to go? They're going to go into some kind of a trading range. So therefore, they already accomplished their objective. They're already in the trading range, in the balance zone, okay? And if the bears and the market is satisfied, okay, agreed that this is good, now we can buy again, you may not get that second bear bar. But regardless, bears did get continuation, because if you did sell below bar 1, Your profit is 1 point. You got 2 point and an extra tick. That right there is 9 tick failure almost. Well, the bar 2 hasn't closed. We can't really call this a failure. But as is, machines see that as, hey, ATR is 14 points and an extra tick. Your regular scalp is 1 point to test the waters. You already got 2 point and extra tick, okay? So therefore, this is done. And if this bar closes up here, many bears are going to be wanting to sell. Well, first of all, they're going to be disappointed that they didn't get a bear bar closing. Just assume that this bar is still bullish. And then they're going to look to see maybe they could sell at the 50% or maybe even higher, sell and try to fix it. We don't know that. Initial scalp was 2 points, 2 solid points, okay? So normally it's 1 point, but with the ATR is so big, so average is 2 points. So they got that. They know they can scalp. The bears know they can scalp. So they want to close the bar as bearish as possible to get continuation into the midpoint of this trading range that I found. Now, again, this is all, personal. So someone will actually measure the entire area from bar 5 low all the way to the bar 50 high as the trading range. If that's the case, then mark that too, right? Where's that? Then the trading range midpoint is actually here, so the price can actually continue into that if that's what the bears want. So 2 bear bars, if that's the case, then you're looking for 2 bear bar closes, both of them strongly closing on their lows. Generally, we look for a 1 bar closing on its low, and the second one is still a bear close. You got 2 bars closing on their lows. So now we're at the midpoint. Maybe this is the actual midpoint, and they're trying to close this bull gap by overlapping with bar 81 body, okay, before reversing back up. So, and then on Globex chart, I already marked that area, so this becomes the target. There you go. So they're going towards that. And don't be surprised if we actually reverse. But look what we just tagged. That conservative trading range area that I found, and the 50% of it, 53.50, 38.53.50, and look where they're bouncing at the moment. The 2 bars, bear bars, really nice, but you gotta have to think of, where can the price go and stop. So those 50%, 50% pullback, halfway back, or middle of something is important. Okay, so you don't have to use fib levels at all. Stick to the 1/3 and the 50%. You will still be able to make sense, okay? And maybe even a lot more accurate sense of what you're measuring and where the price can go. You will still be able to make sense, okay? And maybe even a lot more accurate sense of what you're measuring and where the price can go. So, but for bears, I think they want to continue down to 38.45 area. So right now, many machines process this area is the smack in the middle of this trading range. That price actually came back in many times. So they think that this is good place to maybe scalp a little bit, but there could be probably sellers waiting above 3, okay? And the close of 3, even if it closes bullish bar, they may want to actually sell it. So I would not buy anything here. This is probably some scalping and taking profit, and this could actually continue down. Even if it pulls back a little bit to the close of bar 1 or the high of bar 2, sellers are probably waiting there, limit order sellers, but I expect continuation at least to the 38.45 area, even if it pulls back. We have not yet overlapped with bar 81 body, so I'd like to see continuation. Bears trying to get a second leg down. It is, let me check this. Yeah, so we went above yesterday's high, and we are now below yesterday's low. So we have an outside down bar. Okay, so you can see that this is now becoming a second leg. So therefore, it's not far off expecting some kind of continuation on the 5-minute chart. So 38.50 is important to me, maybe a little bit below. 38.45, I like to see them test. If they do think that this entire area is a trading range and that's the midpoint. So before buyers show up, we might actually come all the way down here. But good follow through with bar 2. But upper wick, lower wick, so it's not the best breakout bar. It's not a strong bar like this, okay, bear bar like this with a tiny wick. Instead, it's got a really long wick, okay, but it's still a good, strong bear bar. We need a pullback for limit order sellers, because if they think that this is just now too low, they may be wanting to sell. Okay, so they're still, look what they did with bar 4. And I said immediately machines are probably going to try to sell above bar 3. So the machines immediately started to sell with the close of that bar 3. ATR is 10. So if they have sold, they want 5 points minimum, okay? That's 4, and the 5 is right there. They want 5 points minimum. Scalp that. It might go up a little bit, but it could continue 10 points. I'm going to get rid of this. I'm more interested in 38.45 area now. 46.45. Okay, look what we did. With bar 4, we literally tag the open of the closing bar of December 20th. Okay, so the low of this bar is testing. It's not really overlapping, but you could say this gap is closed, but I doubt it. I think we're going to come down a little bit more. Now, what if we get a no follow through with the second leg and this is it? Well, I did warn you as we get closer to this area, okay, tight trading range, and we were there several times, in fact. Look, we broke down, we went back, broke down, went back. Fake breakout, but we went back and stayed there for a while. And now we're coming back to it. So you're going to get a reaction and a bounce there. That's why I marked it. I like to see continuation for bears a little bit more. So I'm not interested in buying just yet. I want to give bears a little bit more room. But I am interested. I do want to buy, but I need to see that we are done selling, and we're not done yet. It's a good open for bears. Okay, look for some support and resistance for price to even consider reversing back. So that area is here, area of interest, maybe down here, support. So those bulls who bought, their stops might be underneath these lows, maybe even underneath bar 24 because it's a higher low, lower low, higher low, another higher low. So we could continue to come down. And that's why I don't want to rush my buying, because then this would end up being up to 8, up to 10, maybe even more than 10 points I would be stuck in, and I would be forced to scale in down here, maybe 10, 15, 20 points. I can't deal with that kind of emotion. I have to be careful here. The premature buying to trying to fix will lead to a disaster. So you have to be careful. Just be patient. You will get a good entry. Look, this bar 4 went above bar 3. So there are some buyers, maybe not buyers, but profit takers. So market is already showing you something. but expect a continuation until it no longer can continue. Then you look for a good signal bar and then buy above it, scalp at 2 points since ATR is large, and then see if your runner runs to the midsection of this area or the 1/3 of this entire selling trading range. All right, so I'm going to go back and look at my cyclopedia and see if I can find some charts that show me a similar open. Okay, so it's a big gap down, gets continuation. Ours is a lot more stronger, but eventually there's a mini wedge there. Eventually we go back and test the bar 1 high, and maybe somewhere around EMA we get a double top. We could continue to sell. And if that's the case, so we didn't get this strong, but think of this as a small doji, okay? Eventually somewhere we have to reverse. And we're not there yet. So maybe 10 o'clock we might try, maybe 11:30 we might try, but we're not there yet. What if we continue, it gets stronger? So we don't have this. You see how these bars are bear. We have a little bit of pause here, okay? And we have now an inside, outside, inside, bar 3, 4, and 5. So it's a breakout mode, okay? And it's a 3, maybe 4 bar with bar 2. The half of bar 2 is basically the part of the trading range, 4 bar small trading range. So they're selling above that and they're buying below it. So, but it's going to break out since you have outside, inside, outside. It could continue to come down to the 38, 45 area. Then I would look for spike, pullback, channel down, possibly like this. Okay, and then I would start to see pullbacks. And if that leg fails, then we could go and we could end up having this, possibly, or this. But what if we get this? Well, I don't know. That would be catastrophic, I think, because a day like this would continue the following their Friday, bearish. Would be catastrophic, I think, because a day like this would continue the following their Friday, bearish. All right, so we've reached my Globex chart target, give or take, but I'm not satisfied with this. I want more. So I would like bears to come down a little bit more. You could see that tight trading range, inside, outside, inside. So that's terrible that bar 5 is a doji, not a bear close. But that's the minimum that the bears gotten. But is it a minimum for bears or is it a minimum for bulls? So it's undecided. But since probability is to the downside, I'm not going to be interested buying, not just yet. So. Now, bar 5 failing to close bearish, bulls see that as weakness. Okay, so they buy because they see this entire area is a small trading range, so they're at the bottom of that trading range. So they consider buying low, and then they probably somewhere here might take scalp. They're trying to reach here. They're trying to reach here. But I still am not interested in buying. And there will be bears waiting to sell. So I expect continuation. Bears need a pullback if this is too low for them, they want to pull back and sell, but we are far from the average price. So what you can do is you can take, so you have 6 bars here, you can take 14 bars from left, okay? So I would take this as the, maybe there. And average price is right there. And the EMA is almost there. So we might still go back up, but I do need to see bulls start to print a bull bars. So bears need some kind of a double bottom, at least, maybe with bar 4, okay? I'm sorry, bulls need a double bottom at least, and maybe with bar 4. So I still am not interested in buying. But if they do finally start, if the bulls start to show up, potentially we could go test bar 1. Not only just the low, but maybe somewhere here sellers are still waiting. We had GDP and jobless claims reports came out at 8:30 a.m. The market kept selling. We have, I don't see anything else for the rest of the day other than 2-year note auctions. Kansas City Fed Manufacturing Index coming up at 11 a.m., but I don't think we need to worry about that. Tomorrow, the durable goods, 8:30, personal income outlay, 8:30, new home sales, 10, consumer sentiment as 10 o'clock Eastern time. So tomorrow we're going to get some news bars before and after the open. So I didn't buy anything. This is still selling. Like I said, I'm more interested in is what's at 38.45 area, maybe even 38.40, 45 to 40 area. We should be able to test where I marked easily. A little bit more continuation. I said we could go underneath this level. I marked on the Globex also, so that we are getting just that. So hopefully you guys didn't buy anything. Hello, Richard Gayton. I do look at econoday.com a lot, but it's lately I'm not so excited about it. Sometimes they exclude things. Then again, it's a free service, so you know I shouldn't complain. And I also listen to, hey Zito, I listen to the Financial Juice, but that's also free service. I am not paying. They're pretty good. There's only a 10-second delay, but it's generally a lot less than that. I think there are other people, they might be looking at Forex News Factory or News Factor, something like that, that might have some good list of news. You can look at investing.com as well. Yeah. Even if we bounce, say, towards the EMA, sellers are probably waiting there somewhere, or in between, below the EMA, before we go all the way up. So somewhere around here, sellers might be waiting. But that's it. So really nice touch to where I found an alternative 50%. Okay, so what did I do over there? First, I measure this, and then I measured that. Did I? Yes. So that was the 50%, and we are bouncing. So I had all the reasons to stay in the short, but now I'm interested in taking profit. Now, can the bears continue to sell into 38, 36, 35, 38, 36, or 38, 35 area? They might. depending on how this bar closes, it's a breakout, okay? But pullbacks, see this breakout right here? So we might get a pullback and there might be limit order sellers right there or right here in between bar 6 low and bar 4 low. Okay, so the stop order bears did this. So they had a stop order. They probably sold 1, even 2, they got filled, scalped, it went against them. So they might even have keep trailing their stop order underneath 5 and 6, and then they got filled, they scalped, and they're still making money, okay? So we'll probably, and if anybody who bought bar 6, they're going to have to buy down here, maybe underneath these lows to fix it. Market below this low, okay? Market, yeah, I mean, there were buyers here, so we might still continue into this area before buying. So I said we would test 45. We came down and tested 43.75, so that was pretty accurate. But now you might want to pay yourself resistance up above where I marked. So I'm going to get rid of this. These you don't no longer need it. Keep the chart clean. So the price can actually pull back if this bar ends up closing bullish. It is right now a micro double bottom with bar 7, and it's an inside bar, okay? But it is not another outside, inside, outside, inside. Bar 6 actually higher than this big bar 7. So, but it is micro double bottom here at the moment, but there's still more than 3.5 minutes, so we just have to wait. It can still continue down because this is a strength bar and a breakout bar 7. But you're getting these climaxes, this bar, continuation, that bar. Bears want to keep selling and get a continuation here, but we are at a critical area here, so we're bouncing. It was the 50% of this trading range. So a pullback, sellers might be sitting around 38.51 and below bar 6. But this area, important support also. See these? Wick, wick, wick. So the buyers are here always. Just about. So the buyers are here. Now, can we actually dip a little bit and trap the sellers, run some stops, and then go up? Well, I need to see a good bull bar, right? I don't see it yet. All I see is a doji that is trying to close bearish to get continuation for this breakout bear bar 7. So expect this area. You see these wicks, 26, 27, 28, 30, like this area even. A good area buyers might be sitting at. So we just tested that. And I want to see, now I like to see this move actually continue down to the 38, 35. So I'm still not interested in buying anything. I'm going to stick to my guns here and I'm going to wait. Selling is still strong. I don't have a reason to buy. As soon as we take out the bar 8 low, more bear pressure, and that's the proof that why I did not want to buy. bar 8 body closed below bar 7 low and closed on its midpoint, so that's bearish continuation, and bar 9 showing us pressure. I still want to see bears tag 38-35 area, maybe a little bit below, before I see bulls show up. So I have no reason to buy here. We're printing strength after strength bars, good bars, follow through bars. Trend from the open, it's getting a second leg down. Trend from the open, it's getting a second leg down. Lots of stops down here. Market knows that there are stops here probably and here. They want to test this area between the bar 5 low and bar 24 low, like I talked about earlier. I am getting ready to take profit now and probably going to go flat. I want this line to be hit right there on the Globex. I'm getting ready to take profit now and probably going to go flat. I want this line to be hit right there on the Globex. This area right here is a big deal, okay? I'm getting ready to take profit now and probably going to go flat. I want this line to be hit right there on the Globex. This area right here is a big deal, okay? Okay, so here we go, 38.35. We just tested. You can hold, but just be careful. Very good bar. It's basically the, let me see. Well, it hasn't closed yet. I don't want to judge it. There's still 1 minute. But I think you might want to start thinking bulls. 1 hour is also reached a buy zone. Now, can this continue to come down? On the daily, we are getting that outside down bar, right? Can it come all the way down to this low? Sure. In fact, you have a expanding triangle, so we could end up actually selling all the way into here, way below this day's low. But on the 5 minutes, remember you're trading the 5 minute, gotten very close to this area where stops are. They might try to defend, and you really need to think of taking profit. We went 1 tick below, although I'm not sure, let me see. Yeah, we went 1 tick below 38.35, so that was perfect. And I knew it was going to bounce there. So try to warn you guys. Hopefully it was worth holding the short. Can it continue? Well, if the bears actually fill that lower wick of bar 9, they could continue selling into this area. But look what's happening here. Okay. 1, pullback. 2, pullback. We're in the pullback now. Got an inside bar. We could try to sell one more time and get a wedge, perhaps. It is almost, well, it's only 16 minutes after 10. So somewhere around maybe 11:30, if we continue to sell the pullbacks, we may not reverse before testing this area. But we are in the second pullback now, and we might get another leg down, perhaps. Now, eventually, we're going to go up to this level. But first, we might pull back up to here, and sellers might be there on the Globex. This area, eventually that area. But it's just selling. Now, I like to see a little bit up to 44.45, test of 45 perhaps. It's profit taking. All right, so here's the weekly. Okay. We have a nice gap down on the week, and we're getting continuation. This area, we just tested. Now, can we continue to come down? Can this week actually test this area before making a double bottom to go up? Yeah, so we could end up coming down. Now, on the monthly, need a little bit more. Down, up, down, up, down. And it goes up. So we do have a wedge here, bounce from a moving average. Since we have an outside down bar, the question that was asked here by 7 Flames, it's possible that we could come all the way down, maybe have some kind of a double bottom. Or what if we come all the way down? It has to be a strong sell. There's only 6 days left today, and 5 more days tomorrow and next week. Since Monday is considered continuation holiday for Christmas. Yeah, so it's Tuesday, it's Wednesday, Thursday, Friday into the close of the month. I think there's enough time. Close of the month. I think there's enough time. So Ninja told me to keep my charts light. Fine. And instead of days, use bars. So that's what I'm trying to do there. All right, so we have a outside inside 9-10 and a second inside. Okay, so bulls trying to take out the inside bar 10's high and reach a 10-point area above, which is 38, 44, 50, 44, 75, maybe even 45, 38, 45, say. Bears want to take out the low of a inside bar 10 and come down and test the bar 9 low. But bulls can trap if that happens, and if we do come down and test the bar 10 low, there might be buyers there. But you do have a wedge now, and I see that on the ETH chart. So let me see if I can actually show you what I mean by that. So when you're stuck in an inside bar, like bar 9, don't assume that it's going to break out very quickly. Generally, it goes and tests high and then comes back down and tests low, and bears get stuck and it goes back up, and it can actually break out from this end. Okay? It might look like it's breaking down from this end only to trap the bears and then goes right back up. So you have to give this a room, and this is when I use the first inside bar 10 and see what the market is going to do, the next bars are going to do, whether they're going to take out and close a bear body underneath 10. If they do, that means we're going to test the bar 9 low. If they fail to do so, then the other side will take over. It's a back and forth because it's a tight limit order market. They buy here, they sell up there. then I would expect the bears to be trapped and the bulls to take out and test the inside bar's high 10 and eventually break out from the outside bar 9's high. So it can be misleading trying to trade inside a very tight area. If you know what you're looking for, okay, if you know which bar to watch and why, you can actually make money in a place like this. So basically, I buy underneath 10, scalp, and I like to see if I can actually sell or above 10 and scalp until I see this inside bars up and down or high or low taken out by the next bar, which is the second bar inside the outside bar 9, okay? Then I'm making a new assessment and see if I can actually wait for a breakout and then grab some targets there, or look for a trap and then buy at the low and then take profit at the high. See how they're buying underneath 10? That's why I said there might be some buyers waiting there. But first thing the machines are going to do, they're going to scalp, okay? A couple of points, maybe half the ATR. ATR is 7 points and an extra quarter. So say 7 points, right? So that's 3.5. 3.5 points. They might have already scalped. I don't know. I was trying to open a chart, so just give me a second. So I didn't buy anything. I didn't scalp anything. I'm still flat. I already did well here, so I don't want to give back because it's an indecision area. Anything can happen. All I know is that this area is an area of interest. The market still might try to come down to it. So 1, pull back on the RTH. 2, pull back. We're in the pullback, so it's going to go back and forth, like I said. Right? So the bar 11 took out the bar 10 low, the inside bar's low. Bears are trying to continue to get and take out the outside bar's low. So, but there were also buyers bought, but they couldn't close the bar up here because they scalped. So if there are only scalpers there, where are the limit order buyers? I don't know. It's very dangerous to trade in here. So just give me a second. So here's your ETH chart, 5-minute. You can see that we've been selling. Nice leg down. Bear flag. It's actually a bear flat. It's a bear flag form. And then you get another one. And then now it's the third push, and we have a bunch of inside bars. So bears need bar 12 to close bearish to continue down. But now some limit order buyers are showing. Why? Because we're at the low of this trading range. So they're buying there. It's also a wedge. Now, bulls still want to get back up to the 38.45. So that means if this is a wedge, that means you need to start seeing bull bars actually closing above this box or the bar 9 high. Okay, once we start to get those bull bars closing, expect another pullback and a maybe higher low, then go. So until then, I'm not interested in buying because bears can still break out from the low of bar 9 and in fact get down to this level right here. This level or half is right there, or 1-to-1. Okay? Generally, the trapping happens a couple of points below the outside bar. So until I see that, I'm really not interested in buying. And I said earlier, bulls need some kind of a double bottom, right? Whether it's a micro double bottom or double bottom with a prior low. So it'll manifest and it'll show itself to you, but bears can chase this down. Let's see, 38.30 to 38.28 area. 38.28 area is right around here, okay, inside this area I marked. And I said this area is important. Market wants to test it. And on the RTH, we don't have a wedge. We only have 2 pullbacks. We need the third push. ETH, we do have a wedge, but RTH needs to get that as well. So don't rush it, right? You're not after a couple of ticks, a couple of points. When you enter a trade, you want to make at least 5 points, right? And then if it starts to show you that the price starts to show you it's making more than 5 points, say 6 points, right, closing bull bars, then you have a chance of getting a 10-point run there. So plus market is in inertia as always, right? It's pushing down. You only have 1 and 2 bull bars and another bull bar. There's nothing there to buy. So why risk? It's like taking out a cake that you baked, half-baked, right, out of the oven and forcing it on your wife or your husband to eat it. No one wants that. Nothing's baked. Let the bears bake this, right? So now we're testing right there. Now we're tasting. Sorry, I ran out of ideas how to explain it, but you got the point. Picture yourself baking all the males in the trade room with your apron and stuff. All right, let's end this conversation. All right, so we're testing my area of interest. I know why you're asking, is Anu Buhaba. So I understand why you're asking it. There's no rule, to be honest. There's no rule that, you have to get one thing done on ETH and it has to be done also on RTH. I'm just looking for confluence. And I want to see if I'm trading with patterns. Is wedges are dynamite, right? So that's what we learn, and we want to see it happen. I see it if I'm looking at ETH because there are a lot of people do trade ETH charts. Look at the Globex, but it doesn't mean that the same thing has to happen, consecutively on both charts. Now, yesterday I was actually measuring the measured moves or 2Rs, right? And I was seeing ETH chart has this, RTH chart has. Sometimes you get that confluence, but it's not really a rule, okay? And you shouldn't be thinking of, oh yeah, one already manifested, okay, the 3 legs, but the other one doesn't, so I must wait. Just trade what's in front of you, right? So my entire confluence was based upon this area because I know there are stops there. Market wants to run something before reversing because it needs that power, okay? It needs to upset certain traders who might be, okay, sitting there and waiting. And they need to convert those traders into buyers. In order to do that, they need to maybe run some stops of existing buyers and have them back into trade as buyers, okay? Or show something that is very bearish and people keep selling and then suddenly reverse it, okay, and then upset those sellers. So when you have so many traders jumping in to become something, maybe a bullish, right, so go long, then you end up getting big bull bars. So before I see that happening, I look for reasons where that might happen. And I do look at the ETH chart, like for example, I looked at the 5-minute, but here's that wedge right here also. And I do look at certain areas, like look at here. All right, same. Bulls broke this structure with this bull run, okay? So their stops are here. Market is trying to reach that area to upset these bulls, right? Because the bulls continue to breaking those structures and they kept it bullish. Look, right? 3 times break of structure, break of structure, break of structure, finally start to reverse back down. It's coming into a buy zone where the first bull run started. So I'm going to enlarge this so you can see it on the ETH chart, right? So if the bulls, look, bears were breaking structures happily and continuing to go down. We were in a downtrend. But then sentiment started to change. The character of, what is it? Change of character. It's the fancy word that Forex traders use. But think of it that way, right? So you've got a rotation happening. Major bear trend goes sideways, right? Trading range, and the rotation started because character changing, the sentiment changing as bulls breaking these structures. I generally look for 3 or 4, right? And then we started to trap them because this could have been an accumulation, which I hope that it was, and then we would get another flag. Oops, sorry. And we would get another flag and go higher. But that didn't happen. It turned into a distribution, and bears started to make money. They started to make money by breaking the structures, getting 2-to-1s. Okay, targets, maybe 3-to-1 target. Now I look left. If bears are strong here and they're breaking certain structures, 1, 2, they broke that 1, 3, they're going somewhere. And that somewhere is the original bull trend starting point, maybe right there. There's one right there, but that is a part of the structure, really weak breakout, but that's the one. So this area now becomes where I want to start the buy as early as possible. Until that area is hit, I am not going to buy, okay? So, because it could continue to come down to this area, and the buyers could be there. But first, I'm interested in this area. So that's why price is coming down. Why? Because that was the first breakout of structure after rotation. Bulls set the tone and changed the sentiment, changed the character of the market. So the market knows their original buyers that may not be able to get in there, or their stops there. So the whole area becomes a liquidity zone. Get it? So this is why I look at ETH and RTH, but I do trade RTH. Everything you need is on the RTH 5-minute. But looking at this gives you an edge, and you can kind of tell how far this bear trend is going to continue. I need to fix my boo-boo there. So hopefully that makes sense. And if I do see, market is making on the smaller time frame some kind of a wedge, then I'll know, okay, great. I have wedges set up on both ETH and RTH. I have a reason. Now I'm looking for some kind of a double bottom. What have I been saying earlier? I need some kind of a double bottom, right? Bulls need a double bottom, micro double bottom. Take a look at bar 13 and 14, right? So that is a micro double bottom right in the area where I said that we might test. And I had no reason to buy it. And I also said bears can chase this down, right? What did I say? At that time, it was 5 points, 6 points. So I did say they could chase it down to 38.30 and 38.28. Where are we? We're not even at 38.30 yet. So this bar hasn't closed. Well, it looks like a micro double bottom, but I don't know. I have to wait for this bar to close because we could still chase this down to 29.28 area, 38.29.28 area before we reverse back up. So when you're looking at these buy zones and sell zones, okay, so take a look at even RTH. You don't need to go to ETH chart. Here's RTH. When L is looking for buy and sell zones, their buy zones or sell zones, they're weak. Their buy zones and sell zones are very strong. But when you look closely, you're going to see something, right? Break of structure after a major bear trend. Bulls started to show you something there. Look at this consecutive 1, 2, 3, 4, 5, 6, 7, 8 bull bars. Came back, more buyers showed up, and in fact, they broke that structure with this run, right? So when those bulls started to buy strongly, where that buying originates, that becomes that L's strong buy zone. That's when you start to get, okay, now I need to maybe change gears here, or maybe I need to look to, take profit. However, what if market continues to break this and starts, keep selling? What could happen there? Well, let's put some trend lines. Okay, what if we get some kind of an expanding triangle? That's the apex, and this is to the downside, just like it's to the upside. If we break this area, we could come down before reversing back up. So this area is now very important to me. I want to see what the bulls are going to be able to do here or fail. I also have to think like the bears, right? So what if they want to continue to sell this? What if they don't want to stop here? Go back up maybe a little bit, because we're right at the low of a trading range. Trading range, broke out, trapped the buyers, double top, lower high. It's actually a bear flag, okay? Think of this as a one big bear flag. Or triple high and a lower high, wedge. Lower high is a major trend reversal, right? So this must be a bear flag. Bear flags have variations. Bear flags, spike and channel down. Spike, it's actually a spike, pullback and channel down. Eventually we reverse back to that pullback and then sell from there. Bear flat, you get the wedge like this, or you get a double top, lower high, and then sell. And the third one is the actual bear flag. You get a wedge, 1, 2, 3, lower high, and then sell. Now, there's also, this is A, there's also B version, the variation. What is that? Right? So this is what we're having right now. So we need, maybe we break out. So we go up, come down. If we do break it, we go back, retest, and then we start to sell. We don't have to come all the way down here. We can actually reverse from there. So, but right now I'm interested in, if I'm bear, you know, I have to take profit because we are making a wedge here, and it's also a spike. Think of this entire gap is a one big bear bar, okay? This gives you that spike, pullback, and channel down. We might pull back to bar 10. We might pull back to bar 6 or bar 4 low. But if we start to get above it, what if we get a small pullback bull trend from this area, and that will give us a swing? And that generally sets up around 11:30 a.m. Okay, so if you were bullish, you should have looked for some kind of a double bottom. We did have a micro double bottom, but I said I don't know yet. I need to see what will happen there. Now look at what's happening with bar 15. It actually went below it. So now we have an inside bar 14, outside bar 15. We might get another inside, and then finally we could reverse. But I don't know. I still don't know. All I know is that these pullbacks are selling. So we could end up selling maybe a little bit more, finally reverse back up to the EMA, and then we sell at the first touch of the EMA as we get a 20 bar gap. Or we start the reverse now, small pullback bull trend maybe, or a two-legged move, that's what I would expect. But it is only 10:45. It's not even 11 yet. This is the second hour. We've tested the first hour's low, okay? We might get some maybe buyers here. That could give us maybe a 2 legs, 10 bars, somewhere near the EMA. We may not test the EMA. We might just go up to that pullback, bar 10, make a double top, come back down, make another low, okay? And then go back. And we might get rejected there and keep selling. So I can't really say that we're going to start getting some small pullback bull trend right now, right here, because look at the daily chart, daily bar. It's trying to reach somewhere. So your measured move, let's take a look at the measured moves. That's the target right there, and we have not reached it. But the breakouts are not that strong. It's a small pullback bear trend. Think of it that way, okay? So it's just selling the pullback, selling underneath bars, above bars. Limit orders are selling the pullbacks. Stop orders are selling the prior lows or underneath strong bear bars. So it's still a small pullback bear trend instead. I'm going to take a quick 2-minute break, and I will be back. Okay. I think I collected the last drop of coffee in the coffee pot. It's in my cup right now. So I'm all good to go for another hour. All right, so finally, first 2 consecutive bull bars, and one of them closing on its high is 15.16. And it's a good sign, but still, you know, we need a second entry, right? So without seeing that, the measured move is still valid. A deep pullback, I'd like to expect somehow start to manifest, but still, here's a tip for you guys. If you end up seeing these days, okay, and you never figure out when the reversal is coming on, when the I shouldn't even say reversal, because reversals don't happen when market is steadily selling. It has to rotate. It has to show you some rotation first, and that rotation generally happens at trading range trading. It could be an angled trading range, going up a little bit, coming down, going up, coming down, and finally it starts to rotate to the upside side, right? So and you never see, or you want to see when that's going to happen, use slow RSI indicator. Okay, so I'm going to go out a limb, and I'm going to say, hey, indicator, use an indicator. Now, I have one. I have it on my mobile phone app, and one of the applications that I use. And if I don't see that slow RSI exiting out of the sell zone, I am not interested in jumping in and becoming bullish. And same for bulls. Say the market is a lot bullish and slow RSI. I'm not saying RSI, slow RSI. It's a one line, okay? Not 2 lines, just 1 line. That it's still in the buy zone and it has not exited out of the buy zone. The market is started to sell. To me, that's just a pullback, and the buyers can buy that pullback and get right back up to the prior highs, right? Just like yesterday that we had that. I kept saying in the Discord after the webinar, I stayed in the afternoon and I said, this isn't going to sell. Okay, we have about 1, 2, 3, 4, now 5 bear bars closing. But they're going to start to buy, especially to consider. I bought above that. I bought there. I was a little bit disappointed, 36, but then you got the bull bar, 37, 38. I kept buying, and I had targets. I even in this 5-bar ledge, 1, 2, 3, 4, 5-bar ledge, I said, stay in your long. We're going to test some targets. It's because market wants to go back and test the high. You got a strong. And if you actually had that slow RSI, 1 line, not 2 lines. I actually eliminated all the other indicators. I don't want to see anything. I want to see slow RSI. Okay, that's the 50%. That's the buy zone. This is the sell zone, right? It's there. It's going sideways, but you're getting pullbacks. That's because they're going to buy. As long as the RSI comes out, okay, then you can start to sell. So if you actually go back and look yesterday's price action or now today's, you're going to see slow RSI is now straight right down there. So every pullback is being sold, okay, on the actual chart. And I have a measured move. So this way I can actually see, and I could say, listen, you know, I'm not in a rush. I want to see some second entry. I want to see that no more lows are being made, that the bears cannot take out the lows like bar 15 low. then I want to see that RSI, slow RSI, start to ascend and get out of that sell zone. Then I'm going to look for good buy signal bars, and I'll start scalping. I'll buy, I'll scalp, I'll leave a runner, maybe into EMA, maybe 2 legs, 10 bars, who knows? Or certain bars to the left, bad signal bars, okay, that I could target. Otherwise, I just sit tight. If market is selling, I'm selling with it. Exactly. Yes, I do. I look for, I don't trade with indicators, but over the years is, trial and error. I learned some things can help me or give me an edge. And if I'm not so sure when these bulls are going to start to show up and when I shouldn't be a buyer, I do look at the slow RSI. I put it on a Thinkorswim mobile app. Otherwise, you don't need anything. You can still, that's what the wedge is for. Okay, so you get maybe a wedge there, maybe another wedge right here, right? You have a spike pullback, and a channel down. We're going to go back to bar 10. Maybe the bar 10 low, bar 10 mid, or bar 10 high. Sellers are waiting. We're going to eventually get there. But right now, we're making new lows. Okay, so, and I'm counting. See, you still don't need an indicator. I could still figure that out without the indicator. But sometimes some people cannot, and they buy too early, and then they're stuck. So if you're going to use something, then use that slow RSI. Exactly. So bears are selling every pullback, right? Even bar 16, look, they sold it. Why? Well, think of it as a tight trading range. Right? So that's a trading range right there. Sellers are above there. So any kind of bull bar, like 16, is basically a leg in a trading range. Or from bar 15 low to 16 high is a leg in a small trading range. Sellers are waiting there. Just like in a small pullback bull trend, you buy below a bear bar, maybe, okay? They're going to sell above a bull bar. All right, so we made a new low, but we don't have a bear bar closing below the low of 15, bar 15 low. But we have breached, so now we have 1, 2, 3 wedge. Okay, bulls might be looking for some kind of an entry. Good bar so far, bar 19. It's right around time bar 18 reversal, but I'm more interested in 11:30. So we could get a two-legged move here, and then sometime around 11:30, we could end up getting another swing down. So there are probably buyers one tick above 19, and they want to get to, let's see, they want to get to 38.75 or 38.50, which is a 10-point if you measure from there. So the buyers were above, bar is 19, and they're trying to reverse. If you measure, they already made 2 points, okay? Measure from the high of 19 to the high of 20. That's a 2-point and extra tick right there. So the bulls were able to scalp there. Now they want to continue a little bit further more, but can they? So right now these bulls scalp, machine scalp. As the price goes towards the high of this small trading range, maybe there and there, okay, they're going to scalp. They're going to take that 2.1 point ATR is slightly 5 and above, okay? So it is okay to grab that 2 point, right? So half of 5 is 5.25, so roll it to 5, 2.5 points, right? So they grabbed the 2 points and an extra tick. And that's why we're stalling here with this. So can the swing actually start now? Can we start to get some good bull bars? Well, we'll see. Market will always show you what it has in store, right? So we did not reach the measured move. Unless you measure from here, then we have reached it, okay? So if you do take that, then we have reached it. Maybe that's the reason they had it enough and they're exhausted. They're in a really good place, okay? And they want to buy. But I need to see consecutive bull bars. I need to see some kind of a bull momentum showing up. And 2-point and an extra tick scalp is not good enough. That's just a scalp to test the waters and see how much bulls can move the price. They have to move 5 points. They need to take 5 points at least, and then close a bar 1 point above that 5 points, so 6 points, and that is around the high of bar 19. Okay, so the bar 20 already breached that 6 point, but I need to see a bull bar closing there. Scalping and closing a bear bar, okay, is not good enough for me to assume that we're going to keep going up. So I can measure a 10-point, but this bar needs to close right here, right around there at minimum, or 1 tick below the high of bar 19. If the bulls can manage to do that, then they're going to keep pushing towards the 38.75. Otherwise, we'll come down again. So stop orders testing the waters. Stop order bulls are testing the waters above bar 20. They know they were able to make a 2-point plus extra tick, so that's good. Now, everybody else, other bulls, are watching where this bar 20 is going to stop printing or is going to close. I guess too much coffee is not helping me talk right. Sorry about that. I couldn't find the right words. So I didn't buy. I need solid 2 consecutive bull bars, maybe even a third one. So market does what it does best. If it's selling, it's going to want to keep selling, right? I need to see it. And generally, these turnarounds start with first limit order bulls entering the market, then stop order bulls join. So how does that work, right? So here's the signs I'm looking for other than following this slow RSI still in the slumps. It's still in the sell zone. Okay, so I knew this was coming. So here we go. Say a bar and another bar, maybe. And the market is coming down. You're getting some kind of a bear bar. Like this bar was bearish and now bullish. But look, did it test 1 tick below 20? It's probably going to come down and test the 20. It needs to breach that low, come down, come down, come down, and then suddenly go up and start to close bullish. Okay, if it closes bullish, limit order bulls start to enter and able to close the bar bullish. So this bar, 21, needs to close bullish. Then stop order bulls, either there or there, will start to enter. And then you start to get more bull bars closing. When the limit and the stop enters together in the market, then you have, okay, some kind of a momentum setting up for bulls. I don't see that yet. Look what happened here. They made a new low with a wick. That's a one problem for bulls. They try to buy. There were stop orders entered above bar 19. Couldn't go anywhere other than 2 points. So there's no reason for me to buy just yet. And what happened to that? That's done now. That is done. Trend continues. In fact, they're trying to get to now. That one's a 10-point, so it's going to bounce. They're taking profit. Bear's going to actually continue right there. 14 to 15, so I'm just going to measure it like that. Just about. If they do close this bar body after taking profit at the 10-point, down here somewhere, they could continue to come down. Or we have a new low, and that's another reason why they might continue to come down, depending on where this bar 21 body closes. If the bulls start to close this bar bullish, then we have limit order. Bulls might be entering, but I still don't see it. I need to see how this bar is going to close. So by reading the bar by bar, okay, you don't need indicators. You don't need slope RSI to tell you what market might do. And that's still your measured move. That's still the target. And in fact, measure again. That's still 10. So can we go furthermore down? We might, but that body needs to close somewhere 2650 area. I'm waiting for the day that big loser will replace his name to big winner. That day is coming. I'm pretty sure it is coming. I'm encouraging him to change his name. So I'm going to go back to the encyclopedia and start looking at things. So it is bar 21, and we still don't have a reversal yet. 20 bar gap to the EMA. We're going to get back to EMA eventually. It's just that, are the bears waiting there, or are we going to get some kind of a small pullback bull trend start soon? Well, like I said, this is a good sign. 15 and 16 consecutive bull bars, one of them closing on its high. Okay, so it's good. Now the bulls start at the buy at those lows. We see it already. And I don't see a bear bar closing below the prior lows either. So that's a sign for bulls. They tried, bears tried again. I don't see it. But if this bar now closes again, then I have no reason to buy still yet. It's not ready. So keep that cake in the oven. It's not baked yet. I'm the worst baker in the world. I've tried baking a couple of months ago. First, I don't know what I baked. No one could able to eat it. I mean, they were like, it's good. I couldn't even swallow the whole thing. It was just disgusting, so it just went into garbage. It's baking is an art. Anyone who can bake, I can't. All right, so it's a good bar. There's also another wedge here, okay, in a way, small, but really I'm more interested in. So now we made a new low. I just need to see this bar now close bullish. Hopefully this application is not going to crash now. Oh, yep, it did. So just give me a second, please. Just measure from the low, the new low at 10 points to the upside. That's where the bulls are trying to get to now. That's the minimum. And we could finally see a reversal back up to EMA 2 legs possibly. But because it's been a 20 bar plus, okay, there are probably sellers waiting there. So first, bulls are trying to reverse this and probably going to take profit at that 10-point area. You can also measure about 5 points above that bar 21 to see, okay, where they're going to take profit, because those bulls are now trying to put in a 5-point solid above the 21. That's another 2-point and extra tick. 5-point is right there if you bought above this bar. But if you measure from here, 10-point is right there. So between the 10 and the 5, bulls are trying to reach that level. In fact, bulls can actually take us to 41.50 if they wanted to. But first things first, right? So they have to test the water, see if now they can make that 5-point, because they made 2-point an extra tick before. Now they moved 2-point and 2 ticks. They really need to start getting up to these levels. If this bar closes yet another bear bar, we're still in the small pullback bear trend. Okay, so you're going to have to buy low to break even if you bought one tick above bar 21. Limit order buyers might be still waiting at the 50% of bar 21, okay, and then they might enter again, and we might finally get a good second bull bar close. So the reason why this is coming down, not only it's a small pullback bear trend, but market is not ready to buy. So we have a pin bar that before it bought at the 50%, look at bar 20, but then it closed bearish. Now we have a new low. We have another pin bar. We have a new low with 21 and a pin bar. So if we do come down right around here, limit order buyers might start to enter underneath 20, test the 50%, and then they need to close the bar 23 bullish enough to start to turn around. If they don't do that, they fail to do that, then the bears are going to take out this low and keep going down. But I think we had it enough. I think we're going to end up going up here and maybe even up here, 15 point. So if this bar closes bullish, now I'm going to be interested in buying, at least slowly. But slow RSI is still in the sell zone, and it's difficult. Yes, these are the machine scalper machines, and they're scalping along the way, which I measured and explained why. Like, for example, here, just get this out of the way, right? So if you bought above that, how much did they scalp? 2 solid points, an extra tick. That's good, right? But where they could not close that bar all the way down here. Now look at bar 22. Buyers start to show up. Some bull bars are, bull machines are buying. If they bought right underneath there, how much did they make? That's a 3-point. That's a great scalp. But the goal is to close this bar bullish enough, okay, to get to 5. Or if you're measuring from the pivotal level, then 10, 9 or 10. Yes, there's this trading range. They're buying at the lows. You can see that they're buying, and they're scalping at the highs. So reversals don't happen very quickly. It goes sideways and continues down, sideways and continues down until order flow starts to change a little bit. It tips, right, to the buy side. And you can kind of read the signs to decide that order flow might have, started to change. So I expect 37.50 to be tagged and continuation to possibly, 38.37.50 and a continuation to 38.40.50 or 41 area is for bulls. So I like machines to get us right here at minimum and then get back up here, right around maybe here. So EMA is magnet, but it's difficult. Bears want to keep the gap open and they want to keep selling downwards. So this could be a good pullback to sell again. But I think we're destined to go to the EMA. And if they fail to get there, if these bulls bought, okay, start to buy here, start to buy underneath these lows, if they cannot make a 5 solid points buying above 21 or 10 points from the pivot level, that's going to say something about them, right? So they don't have it yet. They don't have that strength. They can't find buyers to join them, and the market continue to come down. That's a sign. Anytime market moves 6 points, 5 points, but they can't get to the 10 points, that means these guys, these bulls are not making money. And when they see it, they know that, add another 40 minutes for that cake in the oven. So this market can literally come down to 38.25 area. All right, so you see how the limit orders start to buy underneath 22 and then close the bull bar, actually, So now more limit orders could join. Stop orders are now above, okay, either above 21, or we can end up going up above the EMA. And that would bring us, sorry, not that, sorry. That's 10 points from here. This I'm trying to select and reposition. So if we say this bar closes bullish, they could buy above it, that will be the 5 point, or above here, that will be the 5 point, right? But I'm going to measure this. Now, if we do breach above this 10 point, 15 point is here, we could end up going to the 20 point, even above the EMA. And then make maybe a micro double top and still come down and test the lows. It's possible. Okay. So right now, I'm interested in this. Bulls need to do a lot better here. They need to close this bar bullish. Now they're buying underneath the bear bars. Look, bar 19, both underneath 18. Even though it made a new low, no bear bars are closing below the prior lows. Bar 21 is buying underneath a strong bear close. That's maybe small pullback bull trend started just now. It's 11:30 after all. Bar 23 both underneath 22 is now we need another bull bar closing on its side. Now we need that. So that's what you would look for if you haven't entered the market. And if you don't see it, then it's not ready yet. We're going sideways. I like to see bulls close this bar bullish in 2 minutes and 50 seconds. Okay, let's take a look at this. Just pay attention to here, from here, okay? So we came down. We could start to test, do this, okay? But still, bears are going to try to sell it at least with 2 legs. But since we are at the 11:30, okay, I like to see some kind of a wedge formation to the upside. So we could end up getting this. But bulls need to show me they can get to the 10 point and they can get that 10 point scalp. It's actually a 5 point scalp if you entered above 21 and your stop is either underneath there or maybe a wide stop. Okay, so wow, we had a really nice trend at the open yesterday, trend at the open today, and it goes to side. Could today be just like yesterday? Yes, it's possible, right? It wasn't really trend at the open. Some will call this a trend at the open. It's actually a trading range breakout at the open and gets. Okay, so either you could take that. So that's 1-to-1, 2-to-1, and then you can adjust 1-to-1, 2-to-1. We came so very close, right? Right around there. I actually measured it like this, just about, and then I look for, measure that, that was too much. Then I measured this, 40 point. So we were goofing when this price action was happening, but this is where I took profit. 40 right there. Even though my 2-to-1 was here, I bought that pullback and I took profit there and the market started to come down from it. So can today be like this? Possible, but it's not as strong, right? So since it's not that strong and we're making some kind of a cup here, so we could go up, come back down, and then continue to go higher, maybe come back down from there. We'll see. So sideways and up, maybe? We'll see. We don't have consecutive bull bars. That's not good for the bulls. But if this bar closes, gets above bar 24, where I marked, either there or there is target. So it's 37.50, 37.25, 37. As early as 38.37, these bulls will start to scalp. If they fail to get there, then we're going to make a new low. There's a measuring gap. So that would be my target for bears still. But since the limit order buyers started to show up at the 50% of the pin bar 21, I have right to have expectations for bulls to at least get to that 36.50 or 37.50 at minimum. Another way of measuring, so I'm going to get those out of the way so you kind of have already, right? So we made a new low, but now we're, if these bears were selling, they sold here, their stops were here, then maybe move down here. They're still selling, their stops are above here. So I'm going to measure against that and see where the bulls can run early stops and get to their 1-to-1 target. To do that, if I'm a bull, say I put my stop here, and this right here, bar 20 high, is the first stop placement that bears might have lowered their stops. So, but first I'm going to measure from there. This is where I want to see bulls actually go and test. Okay? Now, if they do test it, I could say, hey, listen, the bulls actually were able to close bars here. Now I'm going to actually get my 1-to-1 target, which is right there. But we're in such an area that the decision has not been made yet. So I need to see these bulls take out the 20 high. Then I'll know this is where they're trying to get to. And if they start to close bull bars above 42.75, then this is going to be my actual measured move target for bulls. I don't even have that yet. It's just going sideways. Because if you take a look at the slow RSI, that's still straight in the sell zone. So we could end up coming down to here. It's terrible. See, back to the 50% of bar 21 again. This time, we are definitely testing that 50%. Yep, look, if you measure, get rid of that. So those are my bull targets. If I measure it, look where we are. That bar just tested the 50%. So might have processed more buy orders. Bulls really need to close this 25 on its high. If they fail and we end up getting a bear bar right around here, we're going to make a new low and 1950 becomes the target. And then I would measure the same way I measured for bulls, I would measure same way for bears. For measured move, maybe 1-to-1 or alternative 1-to-1. I call the conservative 1-to-1 and then is actual 1-to-1. I just need to see certain bars closing at certain places. Bar 16 is, well, let's measure that. So I'm going to get rid of this. So bar 16 was an outside bar with an inside bar, okay? Look where the bears to profit, they broke out, but it's a false broke out. See bar 16? Bears could not break out with a bear bar. So they trapped the bears, bulls market trapped the bears trying to sell a false breakout, okay? And now might be trying to reverse back up. So this becomes the target for bulls. Okay, but it needs to close above the midpoint. Now, since the bears actually met a target, okay, but there's no breakout, so yes, I would still use bar 16 as, if you're measuring, I would still use bar 16. But if you're measuring like this, with the true mother bar technique that I taught you, okay, then there's a brand new mother bar there, right, or outside bar, whatever you call it. See, we already met that target, and we trapped. So now, bar 23 is your new mother bar. or outside bar with an inside bar 24, trap with 25, your target becomes scalping. This is all scalping. Where's your scalping target? First target, second target, 1-to-1. So this is where the bulls are trying to reach. But they need to close above the midpoint 50% first. It's a scalping technique that I developed for a stalking outside bars and inside bars and looking for solid breakouts. And if the solid breakouts don't happen, you quickly scalp out at the levels that I identify, and then look for a reversal, and then look to see that mother bar's high being broken, and then you look for measured move targets. Scalp targets and a measured move target. It's a good way to get in and get out quickly. So basically, yeah, that's what you would do. Okay, so that's what this user is member is asking. All right, so it's going sideways. It's in a trading range, tight limit order, tight trading range, TTR. Bulls still haven't shown anything that is decent. But let's see. So if there's this trading range here, find the boundaries. Where are the boundaries? There. And possibly there. So this is your trading range. Bears are trying to break down, okay, and get a 1-to-1. That's half. Okay, so the 1-to-1 would be that. But if they fail to close that bear bar, we could go back up and break out from this end. So watch that bar 26, where it closes, bears are going to want to come down here. And then maybe 2-to-1. Look where my 2-to-1 is, right where the measured move target. I excluded the wicks. I'm only taking the bodies, right? So now if they close this bar, this is where they're going to come down, possibly here. And then maybe we finally get some kind of a reversal. So what happened to bulls? What happened to my target? Nothing. They could not get 2 consecutive bull bars. It's not going. Here, I'm going to measure again. You can measure these levels and put on your chart. I'm going to get rid of it. Okay, so this is my range. From here to the bar close. Do you see a 6-point? Do you see it? All bulls did was a 5-point scalp from the pivotal level, okay, or from here, just a 2-point and an extra tick. That's all they could do if they bought above 21. Or if they're measuring from here, where is that 6-point close? Where is it? Do you see it? I don't see it. So if they don't see it, they're not going to buy it and expect 10-point move up, 10, 11, 14, 15, 20. So bears are going to continue selling. Therefore, this is your first target and a measured move target, and then 2-to-1 down here, 38, 19, 75. All right, so give me a second here. They're trying to come down here. They have a breakout of this tight trading range. That's 1-to-1, that's 2-to-1. You can also measure like this. That's 1-to-1. That's 2-to-1. So what happened to bulls? What happened to my bull targets? Done. Failed. That stop was defended. Stop area. So what did they do? Here, I'm going to remove everything. Okay, except I'm going to keep this. Actually, I'm going to keep this. I'm going to remove everything. Now, if the stop here and the breakout is there, can we come down here? Yeah, sure. But first, I need to see this tested. Okay, if I measure from that stop to that stop, bears are taking these stops out. in order to come down to actual measured move, which is right there, I need to see bears close a bear bar below 21.25. If they do close it, then I'm going to say, here's your continuation target, 15.50. But in between, there's some kind of a measured gap or measured move, the way that I did it. So instead of measuring from here, we're already there. So that's your actual measured move. But there's a gap right there. So I want to measure that for a better target. So I'm going to use that high because the gap above from 8 high to the 6 low or the 4. Okay, so there's a gap there. Then I have continuation, give or take 38.20. But I mean, in defense of the bulls, or there might be bulls here, or why this wick is going up, that's because that was the actual original measured move target we had earlier. Market already breached that, okay? And ATR is not that big, so this overshoot, that's not an overshoot. That's actually bears might be seeing much better target and wanting to get there. So ATR is not that big, so I can't really call this an overshoot. It's still 5, it's good. So you can either take profit, okay, or you could say, wait, there is a tight trading range here. I'm going to exclude the wicks, okay, and I'm going to find my 1-to-1 right there. Or you could say, yeah, I'm going to use that. So that's it. We overshot it. So we could still come down to here. But I need to see this profit taken be done. And then last second, in 1.5 minutes, this bar closing down here below that blue line, then we could continue here. So however you measure, okay, so basically they're trying to go to a 1-to-1 always. Or you could say, well, bears were selling, right, here. They started to sell right there. And bulls could not make more than 5 points. So this trend down continues. And if I measure, where are we? 15-point scalp. Why do you think that this bar is bouncing? Then went beyond here. I'll measure from there, 14 to 15 points. Look, 15 points, an extra couple of ticks to fill everybody, right? So it's bouncing. These bears are scalping. But bar 26, I'm going to zoom in. There's something happened there. That bar 26 closed right at the prior low, not 1 tick below. So that's not good for the bears. But it's still a strength. This is still good for bears, but it's just not that a great breakout. So therefore, you're getting this confusion. But if you actually measure, if I measure from here to there, bulls took profit. Okay? So I have to start counting again. And I want to see how much they moved. First, they moved 10 points. 11, they closed the bar beyond 10 points. That means they're going to keep selling because they want to move 15 points. They're in a swing still. And in fact, they can still come down to 19 and 20 point area, which is right here underneath that measured move. So bears still own this market. So they're still showing me that they can still sell this into here. Right now, they're taking profit because they're in a trend that is a small swing, and they hit the 15 point, they're taking profit. So that's what this wick is about. They're paying themselves. I don't see a bull bar. And if that wick is filled with another bear body, then I know exactly where they're trying to go. They're going to have to close that bar right here at the 15 and possibly around 15.50, 15.75. Then they're going to try to get to 19 to 20. So I'm going to just maybe mark 19.25. since it's right at the measured move. So they can come down here, take profit, and then start to bounce. So I look at all of this. So when I'm trading is, you know, I read the bar by bar analysis like Al does. I look at, you know, these measured moves, 1-to-1s, 2-to-1s, is who's in charge, how much the bulls actually move the market, but why are they failing? They couldn't go no more than 5 points. That's it. That's all they got. And they don't see a good, you know, bullish momentum. So they're going to get out of the way, and the bears are going to keep selling. And then I start to measure for them. And everything converges right around here, then I know these bears are going for a 20-point alpha trend move down. So this is still a bear trend. Another wedge, 1, 2, 3. After another one, 1, 2, 3, or 1, 2, 3, or 1, 2, 3, 4. Or is this a wedge breakout, failure for wedge to reverse? So now we have a brand new one. 1 up, 2 up. Maybe we come down and finally start to go up. That's I'm basically speculating there. But what I'm not speculating is the math. Math always will tell you, okay, what's exactly happening. Numbers don't lie, okay? And I'm measuring. I know what the machines are measuring. So look, that bar is trying to close right around 15 point and extra 3 ticks. If they do close that bar right there, that means they have still room to get to the 20 point, 19 to 20 point area. So I'll mark the 20 point. You can take profit a couple of ticks above or maybe a point above as it gets closer. But first you need to see that body close down here. See how it's trying to go? Now, if they cannot close this bar in 1 minute and suddenly this bar closes up here, bulls can take over, and that's all the bears are going to get. 15-point run. Bar 16. Yeah, we could get there. They try to buy there, and then they bought underneath again, right? But they kind of exit out. These bulls who bought, they bought again, and they broke even. So once they get out of the way, we get this move down. Eventually, we will get up there, sure. But market needs to show me. Bar 28, and by the time, maybe bar 32 to 39, we might actually test EMA. And don't be surprised if the EMA sells right away with the first touch. And we stay underneath the EMA all the way to close, or get back to EMA and sell again for the second touch. And then maybe like the last 15 minutes or 10 minutes to close, we make a reversal to the EMA and then close either at the EMA or around the EMA. That's trend all day. So we have a micro double bottom. It's 27.28. Now bears did not close the body where I wanted them to close. Okay, so I can't really assume that this is going to continue to sell. And now we also have a micro double bottom and it's wedge, and we now have an inside bar. Some bulls are going to bull stop, okay, stop bulls, I should say. They're going to start to lower their buy orders. So no one wants to buy above a 28, obviously. Maybe they might just buy in. If this bar closes bullish, they might lower that stop order above it and go for a 2-point. ATR is 4. It's not 425, it's 4. So half the 4 is 2 points. So they might wanting to go for 1 point or 5 ticks, okay? 1 point plus extra tick to get a solid point, or 2 points. Now, I don't know. But if they do close this bar here, like right around there, that's it. This is where we're coming down to. Okay, so now we have Is that a ledge? Yep, so we have a 3-bar ledge here, and well, if this bar closes like this, then we have 3 identical lows. We get ledges towards the end of the year, by the way. I have witnessed this phenomena last year, year before, almost like towards the end of the year, or market is about to make certain moves, like big moves coming, okay, or market sentiment's about to change. You start to get every day some ledge setups. You don't get it for a long time, and then they start to manifest. And somebody actually was talking about that yesterday in Discord, BTC Discord. Someone else noticed it. That's because that's what happens. So we got a ledge. We will eventually come down and test 1 tick below if this bar closes. Even up here, we're going to come down and probably test it. Now, I don't know when, but we will. So now bulls are trying to put a, make a maybe a 5-point and a 6-point close, a bull bar, to get to the 10-point, which is at 38, 33, 25. But we don't know yet. This bar is a baby bar right now. It's just so little. We don't know. And this ledge is telling me that the bears are not happy. They want to test at least 1 tick below and finish the job this auction because they keep selling this and they want to get to the 20-point. Well, I call this a ledge now, but it's not really ledge. It's too early to call this a ledge. This bar hasn't closed yet. If it goes 1 tick below 28, I don't have a ledge there. So let's just wait. Market is making new lows and keeping the gaps open. So if you go to line chart, see there's a gap right there. There's a gap right here. So we're going to eventually go back up to here, okay, where we broke down. We're going to test this area. Bulls, if bulls do start to come in the market, they want to close this gap. See how strong? It's not that strong, but still, this is why market wants to keep coming down. So bears own this market. So if you're buying, you should always mark. Okay, so we now have 3 identical lows. That means you should always expect market to come down and finish this auction and come down and test that area. It's a magnet now. Okay, so even if it goes higher, it's going to eventually come down here. If market continues to go higher, somehow we start to get that small pullback bull trend, lasts about an hour or 2. Tomorrow we could end up coming down there. We're going to test 1 tick below, so mark that. But I like these ledges, magnets, to be tested quickly, maybe like in 10 minutes, 15 minutes, no more than that. But if it lasts, if the bull trend starts and lasts, you should always have an eye, keep an eye on that the next day, because we will get there and we will test it. So we have an outside bar 27, inside bar 28, inside bar 29. Okay, so bears tried to take out the inside bar 28 low, failed. Okay, got trapped there. Bulls try to take out the inside bar 28 high. They closed a really nice bar, but they couldn't do anything. So now you have maybe outside, you see 29 is inside the 28. So you have OO and I. Look at this. You have OOO, actually 3 O's, because now bar 30 is an inside bar inside of 29. So you have 3 OOO. Oh, oh, this cake is baked. It's a breakout mode. That's what I'm trying to say. No, it's not baked yet. So it looks like we might test 1 tick below this ledge. Let's see. Between myself and Tim Fairweather, you guys get a lot of goofing. We gotta have Tim Stout goof. He's all business, and Brad, the 2 of them. They're just strictly professionalism. I'm posting these gifts and trying to get Tim to goof a little. I have yet to have him goof. Brad, I can hear the smiling in his voice, but I'm gonna prevail. But I think between myself and Tim Fairweather and his accent, you know, you gotta have fun. Let's see. It's a tight trading range. Selling above or close of a bull bar, still machines are making money, scalpers paradise. But if bulls do close a bar at 29.25 and one tick above, if and only close a bar at 29.25 or one tick above, we're going to find ourselves at 33.25. Possibly at 36.25 or 37.25 continuation. You might even actually go and test bar 10, not just 16. We can even test bar 10, and we could end up finding ourselves at 38.42.25. So, but if and only bulls close a bull bar at and above 29.25 first. Ooh, nice. Okay, so Richard just posted a comment, announcement, I should say, which I love these announcements, because that means more videos coming in. So he said, FYI, reference the OO, such as that Rose has been talking about. BTC members will have a new bonus video, number 15, this weekend on topic. That's a gift from Santa. All right. That's a Christmas gift right there. Excellent. Bulls are still trying, but they really need to close where I said they need to close to keep moving higher to 33.25 and perhaps up to 37.25 or 37 area. So kind of got the idea, so I'm going to clean this up. We have a measured move target still here and a ledge 27, 28, 29. 1, 2, 3, and maybe 1, 2, and 3 nested wedges. So some kind of reversal is expected finally. 2 bull bars, that's great. If we get the third bar, take a notice, okay, or take a note where the bars are opening and closing from bar 27. I'm sorry, bar 29. So bar 29, bull bar. Bar 30, bull bar, okay. In fact, it closed above the prior bar's close, right? So bulls really need to show us some momentum here, and that starts with closing the bar 31, bullish. If they do close this bar in 3 minutes up here, that means expect another leg up to the top of this trading range, okay? Or there's a small triangle. That would be the either there or here, first test, okay? And we could test here, and then I would say 10 points right there. So I would expect bulls to get up here. This is resistance up here. Plenty of time for bulls to close this bar bullish enough, or we're just going to make another low. We're going to come down and test that, finish that ledge with 1 tick or 1 point below. Maybe, let's see if that's 23.25, 21.25, that's 2 points. 20.25, that's 3 points. So when you're buying Just be careful. Okay. Bears have a reason to come down and test here. And if you want to really see these targets hit, then you have to measure from this level, 6 point, wait for a bull bar closing above this pink line. Okay, so if you do see it, then there's a potential, but we don't even have that yet. And if you actually measure, I'm going to measure again. This is how I trade. If you bought here and the price went up there, all you made was a 1 point. Let me get this out of the way. 1 point. It's not 125. 1. So you think machines made money there or anybody else? Hold on. No, that's a solid point. So machines did make money there. Only a 1 point scalp. That's it. Nothing more. Why? Look at ATR. Half the ATR is like what? 1.5, 175 maybe. So there's nothing there, okay, to excite bulls. And they were not able to make. That's a 5 point scalp from here, but they really need to close a bar right there. So if I don't see it, there's no way I can buy this and expect price to get up here. And if there's a ledge around, oh yeah, the one tick below that ledge is now magnet. And in fact, not only that, now I'm more interested in this, 19 to 20, which they can come down here. Bears were going towards this. Look at the bar 28. It closed slightly below its midpoint. So these bears are disappointed. They sold higher because this is where they wanted to get down. So there was an auction here, if you think of it that way, and it's just couldn't finish, right? And I don't really trade with the auction idea, but when I see this, that I know the market failed to do something there and it wants to finish that, okay? So I know that there's something that needed to be happening, didn't happen. That's because these bears are disappointed, so they sell above 5 points above, 5 points above, and they want to come down and finish this, okay? Might even test here because they do see this measured move target. So that's my reasoning why these bulls are not able to get up there. Now, we have nested wedges, right? Wedges can be not only 3 pushes, it could be 4 pushes, 4 small push. And that's what we might have here. And then if we do get some kind of a higher low, or we make 1 tick low and we get that 1, 2, 3 again, okay, then I'm going to start looking for that pullback still. But it's just math is not adding up for bulls. So I didn't buy anything. I wanted to see this. Come down, come down, come down. Goes up a certain amount, comes down, and then goes above it, closes, comes back. I'm going to buy it, okay? Because I've got a channel. Maybe I'm buying low, and then I'm going up here. That did not happen yet. So I cannot rush this. So I cannot rush this. All right, so let's see, where are we in the bigger scheme of things? We're at a low of some kind of a trading range. See this? So this trading range can keep us next couple of days going down, up. So in order for bulls to actually reverse, they need to trap the bears. In order for market to turn around, we might end up coming down and testing here, and then reverse, and then go back up. So I don't know about the center rally, but that will be tomorrow, I guess. Or we'll start today, I don't know. Probably tomorrow. And we could do this, in fact. And here's your rally tomorrow. That would be nice. I would like that. So we're at the low of some kind of a trading range, but we're not all the way at the down lows. So I think we might still continue to sell. But if it's too low, it's better to sell up here. So I would like to see a pullback at least. I'm still expecting for bulls to at least try to close above where I marked. $29.25. 50 is better, but minimum $29.25. If they do close it, then we go one leg pull back, second leg up. So there's a doji. Some might lower their buy stops above it, but you're in a tight trading range and not a good bar to buy. But it's a one tick high close. 32 body is basically a one tick body. We don't even know what it is, but it closed pretty high considering. So that would be first entry bulls and possibly second entry bulls, but the 32 is really a horrible bar. But there will be buyers probably above it. I don't know if I want to buy it. I need a bull close. I'm going to go back to Encyclopedia and look for, here is a small pullback bear trend. Okay, so it actually lasted pretty long, all the way to bar 50 in fact. So we could actually keep selling, 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 selling sometime around bar 48.50. That's around bar, what is it? Bar 48.50. Yeah, that's around 1:30 p.m. We might finally get this, okay? Or somewhere around bar 40, we might start to see, okay, price coming into or reversing a little bit. We'll see. Or we're going to reverse, come down and reverse up to the EMA, and sometime around bar 48.50, we get another swing down, okay? So it's possible. I don't know if we're going to get this, but right now we're in this and we're keeping that gap to the EMA open. So when you measure these breakout points from possible stop areas, bears are looking for one-to-ones. So we finally get there. By the time we get there, you see that's around bar 40, I guess. Hold on, but think about it from, count it from here. And then somewhere around 1:30, okay, p.m. Eastern time, we start this swing. That 2 bars, it wasn't enough for me to do anything. All you got was a 5-tick scalp there, buying above 29. So here comes the ledge magnet. We just finished that job. So that's done. Okay, so that auction is completed. And the bears can continue to come down to the magnet and also where I marked earlier, 19 to 20 point area. But they have to close this bar bearish like this on its low, below the ledge. But they are testing below it, so that's done. 23.25, 22.50. 3 ticks below. So I am no longer interested in this because we made a new low. All right, so still selling. Now I want to check something. If you measure the entire Globex range where we broke down, that's 1-to-1 right there. It's 20.75. Okay, so that's where I think the market is trying to reach. or yeah, 2025-ish, which is same as what we have on the RTH. Now we have a new low with a bear body. Okay, so this is still small pullback bear trend. So these stops are being lowered now from there to there to there. Okay, so because we have a body actually did close one tick below that ledge. So this trend continues. But we will eventually get back up to the EMA. We will close at or above EMA. We will get that. Maybe 1 bar, maybe 3 bars, but we will get it. It's just not ready yet. Every time I look for bullish conditions, it's not setting up because it's a relentless trend. It's slowly coming down. But this right here could be the final target before we go right back up. So I would expect a market to come down and test maybe even 1 point below 38.20, 38.19, possibly 38.18 before going back up. So expect a little bit more down, but not much. I think around bar, it's possible that around bar 40 we might just go back up. But if that's a 10 bar or 8 bar, 2 legs to EMA, sometime around 1:30 p.m. or bar 48.50, we might start to swing down once again from the EMA. So expect a little bit more into this 20 point. Bears want the 20 point as alpha trend. They worked very hard to keep the market bearish. So let's see if we can actually test at a minimum 38.20 and then maybe 1 point below before bouncing. I am done with my session. I need to sign off. But I'll just stay since there's nobody after me. I'll just hang around a little bit more. Here we go. All right, we just tested all these targets. Good job, bears. All right, so what now? Trend continues. Can it come all the way down? Can the bears actually move this to 40 point? First, they're going to have to come down, sorry, here. They need to take profit, so we're going to take profit here, maybe a pullback. But in order to get down to the 40 point, which is we come all the way down here, they're going to have to first test here, bounce a little bit, and then continue down. So I did say that I don't want to buy or look to buy or any kind of counter trend back up to EMA before the 38.19 or 18 hit. And we are there right now. So 20 point trend, bears need to take profit, expect a lower wick pushing the body up, or maybe the next bar, an inside bar. However, if this bar closes down here, we could continue another 5 to 10 points down here, where I marked earlier. So I want to measure again. All right, so if I can measure here, but I'm going to measure from here since we broke that. We might end up testing this right here. Or if you broke that. All right, so if I can measure here, but I'm going to measure from here since we broke that. We might end up testing this right here. Or if you broke that. So that's it. That will become the target. Or if you measured from here, that's the target. Conservative. So we should at least hit that line. Conservative. So we should at least hit that line. I would take this. That right there. Let's see if they can actually get continuation. Big breakout bar. It could continue down. Now the next is minimum 38.10 or possibly 38.0605 maybe. It could continue to come down. It's a big bear trend. There's nothing to buy. They tried buying, but I try to prove to you that all they're making is either a 1.5 tick or 2.9 ticks, and that's all they're doing, getting failures. No bulls were able to get to a 10-point target, and they couldn't even print no more than 5-point moves. So it's just they get nothing, and they will not linger in the market. So those machines quickly get out and keep selling. All right, I think I'm done with my session. I will be looking for bar 40 midday reversal some kind, or some kind of maybe sideways and up a little bit, or stay sideways. EMA, we're probably going to sell the EMA when we get there. So look for some kind of a double top at the EMA when we get there. There it is. We're going to bounce as we touch it, I think. Now, if we do close a bear bar, we could continue down here. On the daily, December 20th low is magnet. On the hourly, we could end up coming all the way down here. We broke last week's low, so that's the breakout target, give or take. So they can still continue to sell. 40-point bears, their big target is sitting at 99, 37.99. So if you want to mark your chart, we are bouncing, like I said, because that's the measure move. All right, I'm going to sign off now, and I'll be in Discord because I have to trade a little bit more. And I will take a quick lunch break first, I think, and then I'll be in around. All right, have a good day and see you guys tomorrow.